Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
And just like that, we are back with another episode of the Tech Behind FinTech. Joining me is my esteemed guest, Alex Curtis from Hanover Search. Alex, how are you doing today?
I'm great. Thanks, Namdi. Good to be here.
Man, it's great to be here. I'm really interested in this topic. Today's topic, let me put the banner on so everyone sees it throughout the show. You can't build a FinTech without these people. So we're going to really get into what it takes to build a FinTech and the people that you need to make it a success. Before we jump into it, I'll formally introduce my guest. Let's get into some housekeeping. We are streaming live from Facebook, LinkedIn, YouTube. We have another stream going from Instagram. Shout out to all my people there. So without further ado, let me introduce my guest. Once again, today's show title, You Can't Build a FinTech Without These People. Alex joined Hanover in 2012 and has been working as the firm's America's managing director since 2020. Initially joining the firm to establish our global technology transformation practice. During his time at Hanover, he has been responsible for running cross-functional C-suite searches for executives across insurance, banking, wealth management, and fintech industries, and has delivered requirements for Chief Information Technology Officer, Chief Operating Officer, Chief Data Officer, Chief Digital Officer, and transformation leaders. Alex led the build and launch of Hanover Search Practice focused on providing solutions to fintech and InsurTech industries, regularly partnering with PE and VBAC disruptors to accelerate their growth through strategic executive appointments. Based in our LA office, Alex leads teams split across the East and West Coast and delivers assignments across North America and Europe. Wow, man, what a bio.
That's a long bio. I need to close that down a little bit, I think.
Man, it's all good. So listen, before we jump into it, you came in as with your director position in 2020 during COVID. How was that?
I moved to Los Angeles 2 days before LA County shut everything down. So really interesting time to sort of move across the pond and sort of try to establish myself. Difficult to sort of find new people to make friends and that sort of thing, but made it work.
So your strategy, we couldn't go outside. You were locked in. What did you do?
Well, the good thing about LA was, with everything being so sort of outdoor focused, restaurants were able to be open, bars were open. It was more about sort of being outside and a little bit of social distancing. But I got very fortunate and actually met a gentleman who was a neighbor with a golden retriever, who ultimately he and his wife ended up introducing me to the lady I married. So COVID had a good silver lining for me.
That's amazing.
Mm-hmm.
So you met your wife during COVID?
Yeah. The neighbors put on game night every Friday and kept talking about a lady they knew and eventually invited her, and we met and clicked, and we got married last year. So
congratulations.
Thank you.
I had no clue where that story was going to turn, but
that's the beauty of a podcast.
pretty awesome. So listen, today's title, right, when we're talking, really, really interesting. I'm interested in going through all the different steps in terms of executive searches, what it needs to build a FinTech. I want to also touch in a totally new role I heard of, a Chief AI Officer, right? That's later on. We're going to get into that.
Yeah.
But, I really want to just jump into it. So question for you, right? Where do you think, based on your trends that you're seeing, where does the FinTech market in terms of talent stand today?
I mean, it's an incredibly hot area. We've been technically recruiting for FinTech since before the term FinTech was coined. If you think about some of the big firms out there on the banking side of things, you've got the Finastras, which were Mises. On the insurance side of things, you've got Guidewire, who were formed before the term InsurTech was coined. It's been a hot industry for what feels like a very long time now. A lot of executives and people from the corporate side, looking at InsurTechs, looking at FinTechs and wanting to get into it. I think last time I researched it, there's about 12 million people globally working within FinTech. And that's what was one of the fastest growing industries last year in terms of job creation. About 900,000 of those 12 million joined just in the last 12 months. So it's a hot area. It's an area that's growing exponentially, and a really exciting and dynamic industry to be part of.
It's interesting because I was reading a stat and it said the global fintech market was valued at 340 billion in 2024 and is projected to reach 1.13 trillion by 2032.
Yeah,
16.2% compound annual growth. So definitely the industry is taking off. It's took off. It's even getting better.
yeah.
I see also 26,000 global openings as of 2025.
Yeah, incredible, right? I think we've seen a return to the industry over the last 18 to 24 months from the private equity and the venture capital side, which has been great. There are more and more mega funds being raised by private equity firms now that are purely focused on InsurTech, FinTech, a lot of de novo builds, which I think is leading to a lot of these new opportunities from a talent perspective. The private equity venture capital firms want to start new businesses, which effectively means creating a whole new family of jobs from the executive level through to sort of entry level roles. So it's certainly a really exciting time.
Novo businesses. Can you elaborate on that?
Sorry?
You said novo. I missed
de novo. Yeah, so building something from scratch, building it from the ground up. Bringing essentially normally a CEO and maybe another co-founder to the table with an idea and essentially putting the financial backing in place to build something out from scratch.
How does that work? Do they get pitched? Are they coming up with the ideas themselves? Like, how does that process work?
Well, there are a handful of private equity firms who really specialize in that area where they like to be the ones who write the first check. So we work with a couple of them, and they are always incredibly grateful for us being proactive and opportunistically bringing them executives who want to actually launch their own business.
Wow, that's pretty interesting. What do you see people get wrong in this process?
From a hiring perspective,
Yeah.
I think sometimes people rush into hiring. They don't take their time. I think what we see with the private equity and the venture capital firms is an incredibly rigorous process. I think where they differentiate themselves from other organizations, particularly on the corporate side of things, is the referencing. I'm always amazed by the networks that these PE and VC firms have. They only ever seem to be sort of 2 degrees of separation from the talent that's in front of them. So they're able to get pretty substantial references, understanding someone's true successes, how they really operate. You've got people go into an interview and can project one thing. The private equity venture capital firms seem to be really good at taking those background references offline, understanding someone's cultural fit, understanding someone's leadership style and how it's going to fit into their business. I think when you're looking at the startup scale-up world, it's even more important to make sure that the hires that you're making are the right hire. There's less places to hide compared to a corporate. So every hire you make can be fundamental in the success or the failure of the business.
That's interesting. So, like, what are some of the major red flags? You mentioned referencing. Because you're not looking for a developer at this point. You're on the C-suite side. Mm-hmm. So, what are some of the red flags you would say?
I think some of the things that our clients certainly seem to think of as red flags is job movement. Everyone can make a mistake in their career, take the wrong role, go into something that's been missold, go into something that fails that's nothing to do with them. I think one of the first things that people are looking for is longevity. How long has somebody stayed within a role? Have they been promoted within those roles? These are all good things to look for. When people lack that, it can be a red flag.
No, I can totally see that. So give me a time number, like 2 years, 3 years, a year. What are you looking at?
It's interesting because that dynamic is changing a lot. I think, the younger generation now don't seem to have too much of an issue jumping between jobs. It's pretty common to see people spend, 6, 12, 18 months. And that's a dynamic that we're going to have to work with as those individuals get more senior in their careers as well. But historically, we tend to look for 3 to 5 years as being a relatively strong spell with an organization. And obviously beyond that, it's difficult to really make an impact in a business in your first 6 to 12 months often. So if you see somebody who's hopping from job to job 6 to 12 months, you've got to kind of question, well, what were you able to really achieve during that period?
No, and that's a good perspective because it's less about the job hopping itself and more about what impact, what value did you bring,
Yeah.
especially at that level. Because outside of C-suite, you see some people like you said, right? A year, 18 months, they're in and out. They help deliver whatever project and they're out. But at that level, right? It's like okay, we care less about you staying a year or two,
Mhm.
and we care more about what value did you bring to the organization? Like,
Yes.
what can you demonstrate? So it's like not enough time within a shorter period to demonstrate that. And it seems like that's the major concern rather than the specific time limit.
Absolutely, because sometimes things happen that are out of your control that bring something to an end quicker than you might have. Particularly in this world where there's a lot of acquisitions, there's a lot of money coming into the industry, firms being bought, and that's obviously seen as a really good thing. If you've been part of an executive leadership team, particularly one of the early founders of a business which has gone through a successful exit, that's one of the things that a lot of our clients really look to as a big green light to bring them into conversation for a role that they'll be looking to fill.
So let's look at it from another aspect now, right? You have a brand new fintech. We know the obvious. We need some sort of CEO, right? What are some of the other important roles from a startup level that you feel is necessary?
That we've literally just had this conversation this week with a founder of the business who's looking to launch in the US and do exactly the same thing. So we talked through the prioritization of the C-suite. What do you need to really get this business off the ground? One of the obvious areas is around compliance. When you're coming into the financial services, there is compliance everywhere, new regulations that you need to be ahead of. So one of the first appointments that they're actually looking to make is to bring in a general counsel who will also look after the compliance side of the business. Outside of that, if you're going to be a fintech, then one of the key areas is tech. So you need to have your CTO or your CIO in place. That's obviously a critical appointment. And then depending on how quickly you need to scale, you may look at something like a COO, a CHRO, somebody who's going to look at the operations of the business, the people that need to be in the business, because people are everything. People are what drive the business to growth. People are what drive the people to success, drive the business to success, and ultimately are responsible for the culture that's created.
We have CEO, we have the general counsel, we have the CTO, and then a COO, or you mentioned what, chief human resource officer.
Yeah, yeah, that's kind of the sort of first tier that we've often seen clients who are looking to build something from scratch. Again, it does depend on the founders and the skills that the founders bring. If you've got a CFO is obviously a critical role for any business, particularly as it goes through scale. It depends on the skill set that the founders bring to the table. And I think what's really interesting with fintech is that it's more and more regular that the people who are bringing the idea to the table to create this new disruptive, innovative business don't actually come from the industry that they're looking to disrupt. So it's been, and we've seen this in particular in the InsurTech space, where people are looking at how distribution in particular, how do we get these products to people in a way that they want to consume them? That digital mobile digestion of products. And people are coming into InsurTech with no background at all in insurance. And what's been interesting is some of the roles that we've seen created to bridge that gap. So you've got businesses that have been launched, technology platforms that have been built that are cutting edge, very disruptive, filled with automation and digital engagement. And then it's a question of, okay, what about the actual product and the industry expertise that's needed? And we've probably in the last 12 to 18 months run 5 or 6 searches for a chief insurance officer. Now, the chief insurance officer role doesn't really exist in an insurance business as a traditional business, but within an InsurTech, the chief insurance officer role has become absolutely critical and is sort of the right hand of the CEO.
So that makes absolute sense. So we're in a situation essentially where someone who's outside of the industry, they see a huge potential, right? We could automate this process, bring this product to our customers in a better way than our contemporaries are doing it. But I don't have that foundational insurance experience or expertise. So what we're going to do is launch this business. We're going to work with someone like you to now bring in a newly created role called Chief Insurance Officer. And that person has, decades of insurance experience and background. And the CEO, the founder, is working hand in hand with their idea, but they're getting, okay, but can we do this? What's possible here? Does this make sense in this particular industry?
Absolutely. I think, that person understands how the industry has worked historically. They understand the regulations. As I say, the legal and compliance side is huge. But the other thing that they bring is a real level of credibility. Often, if you're looking at InsurTechs that have been founded by people from outside of the industry, one of the things that they might lack is that credibility in the market that they're now operating in. If you can go to a big tier 1 carrier or broker or reinsurance business, depending on what you're launching, that brings that level of credibility when you've got somebody who's left a big role behind them within the industry to come into this new business.
And how, and that's interesting you said that, because how valuable is that? Because especially in industries when you have this great product, you have this great idea, you have a company that you're starting, but now in partnering with potential, with aligning yourself with potential partners, right? Strategic partners, looking at that C-suite, looking at the background, how important is that?
It's really important, because I think, especially in the InsurTech world, a lot of the disruption and the innovation we're seeing is in the distribution. It's people coming in and saying they're frustrated with a process. Why does insurance work like this? And they're trying to think of a way that it could be done differently and in a more efficient, better way. The problem is then actually getting that ability to write the insurance. So being able to work with carriers who provide paper to those InsurTech businesses is super important. And the only way they want to be able to do that is if they've got somebody who's got that credibility, got that history in the industry.
So most of or all of the InsurTechs that you've worked with that didn't necessarily didn't have that background, you've created this chief insurance officer role.
We've done it with a number of firms now, and it's been really successful.
Oh, wow. And because I've never heard of that role before,
Yeah.
So when did it start? Did it start with you guys, or how long has that role been around?
I don't think we can claim responsibility for it. That would be nice, but no. I think it started. Our first search was probably around 2.5 to 3 years ago. The first time we ran that type of mandate, and it made a lot of sense. Like I say, we're seeing more and more people who are incredibly tech savvy coming in to disrupt and innovate traditional industries that have continued to do the same thing for tens of decades. And it's it's an exciting time to be able to come in and disrupt and innovate. And that type of new role, it's almost exciting when you've got a newly created position. You can craft it almost around the person who comes into it.
That's actually amazing. Have you seen that in other verticals within finance? In terms of,
oh, really? I was thinking about this actually just earlier this week, thinking ahead of this conversation. I thought, I wonder if there's a chief wealth officer role for WealthTech, for example. Chief wealth officer roles do exist, but they tend to exist more within RIA wealth management businesses. They don't seem to sort of be established within wealth technology providers as yet. So that could be a really interesting proposition for some of our clients who operate in that space.
I've heard of chief investment officer, right?
Yeah.
That I've heard of. So the chief No, I've never. That's really interesting. But what's even more interesting is the model itself, right? The idea of, we're going to come into this industry to disrupt it, but we're gonna find someone in the C-suite who has some expertise in there and create a role for them. So it
Yeah,
seems like that model could be duplicated across multiple verticals.
absolutely. Yeah, I think it's something that we could definitely see go into, the banking technology side of things, into the wealth technology side of things. I think the InsurTech, it's really interesting how different the different flavors of fintech are. Banking technology is very different to insurance technology, is very different to wealth tech. And these newly created positions are quite specific to that vertical that the technology is servicing. But then we're seeing other roles being created that are actually being replicated across all of those areas. And you mentioned the chief AI officer. That's certainly becoming a really prominent role as people really wrestle with how to best use and optimize the use of AI in their businesses.
Yeah, I mean, even bringing up AI, right? And based on the model that you just described, I mean, it what makes sense to me in the upcoming years. I'm just throwing this out there. I don't have any pre-research in it besides our conversation. But what I do see is people or that are have a certain level of expertise in AI, right? Going to verticals that are not automated, then saying, you know what, we could create this product to help automate it, make it more efficient, create a better product.
Mhm.
But that gap of knowledge within that vertical is still present.
Yeah.
So let's find someone who to fulfill that gap, bring them on the C-suite and create, I don't know, chief whatever officer, right?
Yeah.
And then they'll be our de facto guide to navigate and also add credibility to what we're doing in this industry.
Yeah. Yeah. And again, that points perfectly towards that chief insurance officer role that we've seen, become really popular within the insurtech market now.
That's just it's definitely an interesting model. So like you mentioned the differences between that you start seeing in banking and insurance and wealth tech. What are some of those major differences in terms of um, the C-suite levels or the people the executives that you're finding? What are some of the nuances there?
Yeah, I think it depends on the end user. Obviously you've got the more commercial use of fintech, and then you've got the more sort of personalized use. Are you building a platform that's going to go direct to consumers? Are you building a platform that's going to go to businesses? I think fintech, we often see it more from a B2B perspective. The organizations out there who are building algorithmic trading platforms or building anti-fraud platforms, often they're going in to sell to corporates. A lot on the insurtech and the wealth tech side of things is more built for people like you and I, people who are going out there to buy insurance, are looking for financial advice, are looking to start making investments. So I think a lot of it is that the difference is that end audience that the platform or the technology is being built for, and that can really make a big difference to the type of individual that you want to bring in. I think one of the key things that a lot of our clients look for when they're looking to appoint executives is, have they built a product that is relevant for the type of audience that we want our product to be for? Even if it's a transferable skill and they're coming from another industry, have they built something that's B2B or have they built something that's B2C?
Good point. Good point. Um, that's interesting.
Mhm.
So So it's not necessarily just on, okay, they've had other C-suite roles, but now it's even particular like who we're targeting. Because a person with a skill set of working in a B2B situation will have different experiences from somebody who built something for a B2C.
Mhm.
So, and have you ever had a situation where a person who was formerly working with in a B2C fintech or a situation then said, I'm looking, this is a great opportunity with this company. They focus on B2B and they try to make that transition. Have you seen that?
Yeah, I think and again, that comes down to the type of function, as to where it's classed as being more or less important. I think particularly when we look at, a commercial revenue oriented position. So the chief revenue officer, the chief sales officer, chief marketing officer type of roles. firms often want to be more rigid about ensuring that that person knows how to sell to the right audience. The sales cycle of selling to an enterprise grade corporate can be 12, 18, 24 months. The sales cycle of building a platform that's going to go to retail audiences happens a lot quicker. So it's a very different strategy, different skill set. I think often then if you're looking at something which is focused on the product or the technology side of things, that can sit somewhere in the middle. I would say that looking at the technology and product piece, it's quite important that they know how to build something that is specifically going to be oriented towards a certain audience. And then on the other side of things, if we're looking into the COO, possibly the CFO type of role, that's very transferable. The end audience, B2B or B2C, I would say is less important for those types of functions.
Yeah, and that's another. We had some episodes in the past and brought in some CROs, and then to your point, so it's looking like positions that are more geared towards sales, geared towards direct, looking at your target market and how do we get our products to them or our service to them. That's more so looking at, okay, what segment did you work on previously? Whereas if you're just focused on the overall organization, okay, I would even say, even from a technology perspective, right? Like we're building this product, that could be something that, whether you worked in B2B, B2C, you can definitely transfer. And speaking of different roles, so I know they have a chief product officer, right? That's I would say that's relatively new historically. Would you agree with that?
Yeah, I think it's certainly a newer title that we see. I think it's a title that you see now in almost every FinTech, InsurTech, WealthTech business. That chief product officer is really important. I think that the evolution of FinTech comes down to product, because it's interesting to see which firms class themselves as a FinTech now. To me, historically, the traditional definition of a FinTech is that you're building essentially a technology product for financial services organizations. Whereas there are now a lot of firms out there who call themselves a FinTech because they are a technology-forward, technology-powered financial organization. I think there's a differentiation there. And the product role certainly goes more closely aligned with what I would class as the more traditional FinTech, because their product is technology. So that CPO role is a really important position within an executive leadership team now.
I think you'll see more of that, right? As we start getting into embedded finance, where you're taking financial products and putting it in non traditional financial organizations. But all of a sudden, your sneaker store can have credit cards, right? You could have whatever. You could have these different products, this buy now, pay later, but you could embed them into your workflow, and that's like a debatable question now. Are you considered a FinTech, right? You just started off selling sneakers though, but you have embedded finance, like your customers can get credit cards, they could put things in and have some sort of payment system in which they don't pay immediately for, but they pay over time. Obviously in the background, some bank is powering that, right? But from the customer perspective, they just see your sneaker store. And then the argument can be had, right? Am I a FinTech? And in that situation, you have financial products that you are giving to your customers. So it's definitely interesting to see as things change. We hear a lot, and this always, and I want to kind of spend some time talking about this, right? We hear a lot about culture. It's a big thing, culture. Everyone uses it. You have to get the culture right. You have to figure this out. The culture. I want to change the culture. I want to get your take on that, and looking for these roles, your experience in that, and your thoughts in general about it.
Yeah. I think culture is incredibly important to the success of a business. If you've got a harmonious executive team who are all driving towards that same vision, towards that same goal, it's got a much higher chance of succeeding than if you've put a team together that don't gel, don't work well together. And I think it all boils back down to culture. We try to do as much as we can through our search processes to make sure that there is a really good cultural alignment. And that, that goes beyond just asking someone, where do you want to be in 5-10 years? What do you want to build? It's what drives you, what motivates you to get out of bed in the morning. What's important to you? What are your values? And trying to really align those to the values of an executive team that already exists, that's looking to add just one new person, or looking to build that executive team from the ground up together, which is obviously more challenging because there isn't that established culture already there. It's building a culture together from the ground up.
Difficult, right? Because one would say, agree with me, we could talk about this. If I'm applying for a job, that means that I want to get the job. Correct?
Yep.
I see an opportunity. I put in my hat in the ring, and I want to get the job, right? So usually when people want something, right, they say whatever it takes to get the thing, right? So you're talking to someone who's a leader, right? It's certain characteristics that someone with common sense knows that other leaders embody. So whether they embody this or not, and you're asking them a certain question, they may say certain things that fits into the characteristics of said leaders.
Yep.
So how do you know?
That's a great question. And a lot of it, there's less opportunity for science in this, and often much more about gut feel. But this is where those sort of detailed reference checks can really add a lot of value. Is around what's this person really like? We've seen the resume, we've seen the person who turns up for the interviews, but what do they really like to operate with? For most of the PE firms that we work with, we do references as a business. So we'll speak to normally 2-3 people who've worked with that person. We like to get somebody who's managed them and somebody who's worked for them. But normally those references come through the candidate who's in the process. They propose those people, and I've never seen a candidate propose someone who hasn't said good things, right? So that background reference check and that using the network, and we're privileged enough with the depth and breadth of network we have that we can also tap into that and find out what someone is really like. How do they operate? What is their leadership style? Are they somebody who wants to lead with a carrot or a stick? That type of sort of questioning around what do they really operate like? Because different businesses need different people, and they try to build on different cultures. It's not like everyone's trying to build the exact same culture out there. And I think from a candidate perspective, it would be really naive and silly to go into an interview and to pretend to be something that you're not, because you're probably not going to like that environment either. And that's the key thing about matchmaking with executives is you both have to like what's in front of you for it to be successful.
We don't need specifics, obviously, but I want to know, how do you deal with a situation where it wasn't a good, quote unquote, culture fit? And now they're calling you back and saying, you know what, Alex, not working. You still need, but this isn't working. How does that process work?
It's always a very sensitive topic. Fortunately, it doesn't happen too often, but it absolutely does happen from time to time. And I think what we need to understand is, okay, where are they on the page here? Do they think it's going great, or do they have the same concerns? Do they feel that it's not going well? It's rare for one side to feel strongly it's not going well, for the other to feel that it is going well. We always encourage people to give it a little bit of time. Sometimes there can be a snap decision. I remember being called a few years ago by a client weeks after the person joined. Just weeks, and you just think, wow, how could this have gone so badly wrong? And he wasn't aware that that this had happened, but apparently there were a few red flags internally. And when you get those red flags, it can sometimes be hard to turn back. So I always encourage clients, look, you hired this person for a reason. Give them an opportunity to really bed in and to demonstrate what they can do, the fit, and see from there. But if after 3 months the answer is no, this isn't a good hire, then there's got to be an honest conversation We always have an insurance policy with our appointments where we'll go back to the drawing board and we'll rerun the search to find that right person, to learn from what went wrong. Like I say, fortunately, it doesn't happen too often, but when it does, there's got to be honesty. And that's the best thing, is to have that conversation. Look, we don't think it's working out. I'm sure you don't think it's working out. Let's all agree to, find a new solution. And in that scenario, we work with both parties. We work with the candidate to try and find the right next role. And we've worked with the client to get that right person back in.
What is the most difficult C-suite position that you had problems filling?
That's a really good question. I think the chief revenue officer role can be one of the hardest. And it's interesting because it's probably also the role where we see on average, the shortest longevity in roles, which is never an ideal, sort of thing to see. Is, your chief revenue officers come in, the immediate reaction is, oh, they left because they couldn't make sales. I think the biggest problem with chief revenue officers is that generally most of them are really good salespeople. So as you said earlier, they know what people want to hear. So they're very good at selling themselves. And then it's a case of, are they as good at selling whatever your product is as what they are as selling themselves? So that can often be the hardest, just in terms of discerning between different candidates, how strong they really are.
Do me a favor for the audience, because they might not know. Can you define what a chief revenue officer is?
Yeah, so the chief revenue officer, again, I suppose that's a newer created role over the last sort of 4 or 5 years. It's the idea of bringing all of the components of go-to-market strategy under one leader. So historically, we've seen chief marketing officers, chief sales officers, people who head up customer support and that side of things. It's bringing all of those functions together under one leader who's looking at all things that effectively bring in revenue. So having that alignment in terms of your strategy, in terms of the way that you operate between business development, marketing, sales, and then the customer retention, customer support.
That's definitely interesting. So it's the shortest usually from what you're seeing, because it's just not a good fit, or they have it's not a good culture fit, or they actually have problems selling or hitting sales goals. Which one?
It can be both, particularly when we look at the fintech space. If you're looking at a new scaling fintech, sometimes it can be that the product's just not good enough. It's not actually better than the products that are already out there and established in the market. And it doesn't matter how great a salesperson you are, how big and deep a black book of contacts you've got it's just the product is not good enough. And then other times you can have a great product, but the sales leader just doesn't have that level of connectivity relationship to be able to get the doors open.
Have you seen a situation where, from the first part, right, the product just wasn't as good as the competing products, and the chief revenue officer just didn't hit the sales numbers, but he took that same person, put him in another firm, and he excelled.
Absolutely.
He excelled.
Absolutely. That is pretty commonplace. If you think about how many new fintechs are coming into the market on an annual basis, not all of them are as good as they might look. And are they really providing something that is better than the established competition? Also, how easy is it to replace that? If it's a core system, for example, the repercussions of changing core system are massive. We're talking multi-year projects. So then you're talking about the CEOs and the executives of the potential buyer, whether it's an insurance company, a wealth management firm, a bank. They have to make a decision around okay, the platform might be better, the new product, no question, it's slightly better. But is it worth going through what we have to go through? Are we going to actually gain enough on the back end for the pain that is going to cause us through the process?
Yeah, I've seen that situation happen. So I could definitely understand that. Man, I'm sorry.
I think some of the great things that we see in fintech is we see fintechs that never meant to be a fintech. I've worked with one company who are a legal technology firm launched by ex-lawyers who wanted to automate, significant parts of the legal process, and they've actually suddenly got a huge amount of traction in the insurance industry because the platform that they've built is driving immense automation through the claims litigation process, which can be costly and lengthy from an insurance perspective. And now, within 2 years of signing their first insurance client, over 50% of their revenue is coming from that side of the business. So, they're effectively an InsurTech. So it's really interesting seeing how organizations start with one idea, and then depending on where their use case is actually adopted from a market perspective, can completely morph into something different.
That's definitely that's amazing. I wanted to ask you, because I'll be remiss if I don't talk about this, CISO roles. Because of my background in security, I'm curious to your thoughts on that. What have you seen? What experiences there?
Yeah, I mean, the CISO role is obviously incredibly popular. I think the biggest question that clients often ask me, if that role doesn't exist in their organization and they're looking to create it, is where should it sit? Should it sit under the chief information officer? As a security specialist, I'm sure I would have thought your opinion is probably no. It shouldn't sit under the CIO because, it needs to have that independent ability and authority to challenge what that chief information officer is actually doing. So that's probably one of the biggest questions that we get around the CISO position.
I think years ago, Experian went through that, in which their biggest breach, the CISO was reporting to the CTO, and then that guy was running the CEO. Then after they turned things around, they made those positions both report to the CEO, and then since then, massive benefits. And I think that's a use case that especially in the industry, that a lot of people will reference and utilize. So I was curious to your take on that. So let's get into this now about this chief AI officer. What have you seen so far? Obviously, this is a relatively new role. Want to get your thoughts on it. I'm going to ask more questions as you start talking about it.
Yeah, it's a really hot topic. Everyone's talking about AI, right? It doesn't matter the industry that you're in. Everybody wants to understand how AI is their industry and the company. So that's an area that we are having a lot of client conversations at the moment around how that position can be defined and refined within an organization. AI ultimately helps with data. And I think, historically, the use of machine learning, advanced analytics has essentially sat underneath a chief data officer. And that's where the role has evolved from. But now, as people look at AI specifically and they take that away from a larger data office, it is being created as a standalone position. It's very, very new. So I think in terms of where it's going to go and how it's going to evolve, we're still waiting to see. People still seem to be a little bit reticent with AI because people aren't sure what the regulations are going to be around it. That's a constantly evolving and maturing topic.
So, because you mentioned chief data officer, and in our conversation, I see a similar story with what we just talked about with the CIO or the CTO and the CISO and, the reporting structure. I see that same thing happening with the chief data officer and the chief AI officer. What are your thoughts on that?
Yeah, I think ultimately, if you're going to create a C-suite role, it should probably work as a peer level to other C-suites. It's always interesting when you have C-suite report to C-suite. So if you're going to create a chief AI officer role, then you probably need to give it that autonomy and authority to operate alongside a chief data officer as opposed to being reported up into it.
Do you feel that those roles can be combined into the chief data officer to make it handle both aspects of that?
I think at the moment it is combined. I think if I look at any of my clients who have a chief data officer, data science, analytics, the use of AI and data engineering sits in there alongside the other side of data, which is the quality, the governance, the control side of things, because that's imperative. If you haven't got the right quality, governance, and controls in place, then you can't trust your data. So there's no point in applying AI, advanced analytics, machine learning to data that you can't trust, because the business intelligence, the directive it's going to give you, and the decisions that it's going to tell you to make aren't going to be right.
It's a few questions that I had. I had like and I want to like understand this, right? What have you seen in terms of scaling? Like when a company, fintech starts off with sometimes 10 people, small fintech, they're doing stuff, they make some strides, they hit 20, and they hit 50. What's that number where you see the big shift?
The big shift in what sense? Sorry.
Just in terms of the C-suite, in terms of as things start to change, what's that scale number where you have to add on more? Like it may start off with, like you said, the CEO, the CTO, the general counsel. What's that number as it starts to scale where you start seeing that we have to add on more roles?
Okay, yeah, it's probably when you start getting up beyond 100 to 200.
Okay.
I think when you start getting to that level, I mean, most people don't want more than, sort of 5 direct reports, right? When you get to a certain level, you have engineering teams now that are being productized and moving from that sort of project management to product management idea, and they're creating Scrum teams where, you've probably got somewhere between 8 and 10 people within, your average pod. So when you think about creating 4, 5, 6 of those, you're then getting towards that scale where maybe you're thinking about, okay, maybe now we need to break out from that CIO model and actually bring someone in who's going to look more from a CTO perspective, more from a chief data officer perspective. We need that CISO position. So it's probably when you get into the sort of, plus 100.
Wow. I thought it'd be less. So that's an interesting number.
I guess, if you're 50 people, you probably don't need 10 people with C-suite titles, right?
What's the, and that's like, maybe it's just a question I was having. I was thinking with all these different titles at that 200, right? Let's just say 200, like put that number out there. What's the most C-suite positions you've seen in fintechs of that size, just in your historical history?
Probably somewhere in that 8 to 10 number.
Oh, wow. Okay, so that's interesting. And what were some of those roles? I mean, obviously CEO, COO, CFO,
Yeah.
CRO. What else?
Yeah, well, I think what you've got to remember is that not everyone on the C-suite as well will necessarily be part of the board of directors. Often that's reserved for maybe your top 3 C-suite. So you'll have C-suite who don't sit on the main board. And often fintechs have had to do creative things to attract talent. And putting a C title sometimes is a way to get that person over the line. I'm not going to come in as the head of architecture, but I will come in if you make me the chief architect, for example. And it's not abnormal to see a chief information office have 6 or 7 different C-suite in itself sat within there. You can have the chief architect, you can have the chief chief digital officer, the chief data officer, the chief analytics officer, the chief engineer. It's not abnormal to see that. So there's no sort of one size fits all.
So when you've seen stuff like that, said, okay, like you just mentioned, I won't come in as the head of this organization. I want the title. Mm-hmm. In terms of compensation, are they usually of the same compensation? It's just the title switch. I'm asking out of curiosity.
Yeah, I mean it's difficult for a firm to, particularly if it's a scaling fintech business, to change its comp model. So the comp will often be the comp. There may be sort of a potential sort of plus side on the equity or the long-term incentive, and that's how often the private equity venture capital firms are attracting that talent. We're always talking with them, and the big sort of draw throughout the process from a comp perspective is you won't earn as much cash over the next 3 or 4 years time, but this is a role where the wealth creation opportunity goes far beyond what you can earn at a corporate. It's really sort of generational wealth. We're putting people into C-suite roles with some of the larger PE backers who they've got 8-figure projections in a 3 to 5 year time period. That's the big draw.
So that makes sense. That makes sense, and I could totally see that. You're investing with your time and your sweat equity into this company, so you're not going to get paid necessarily a huge yearly salary, but if things work out as we're projecting, it can be a generational wealth, life changing situation.
Exactly. It's a pretty compelling proposition, really.
Obviously. So yeah, that's no, I like this, man. Those you mentioned, of all the different C suites, but only a couple will sit on the board. What are those positions that usually sit on the board?
Obviously, the CEO. Normally the CFO is part of that as well. And then it really depends from organization to organization. We see the CIO, CTO sit on some boards. It's pretty regular to see a COO sit on the board. In some cases, the CHRO will sit on the board. So it does vary from organization to organization. But I think the two sort of staples are certainly CEO and CFO. If it is a more traditional, as I call it, fintech, where technology is the product, it's then more likely that the CIO, CTO, the top of the technology organization, will have that seat on the board as well.
I know we're almost wrapping up, and I wanted to get this question from you. What advice would you give a rising fintech executive looking to land a C-suite role?
Somebody who's already in fintech or somebody who wants to get into fintech?
Someone who's in fintech, but they want to transition into a C-suite role.
Oh, okay. I think it's the commerciality. It's absolutely the commerciality. I think, we see really good technologists who, can build incredible best-in-class platforms. But if they don't have that commercial understanding of how to really run that platform as a business, it's probably going to be quite difficult for them to get to that C-suite. They've got to be able to really share in and add value to the business vision, not just the, which technologies are we going to actually use to build this platform. It's all about the business vision and that commercial side to the skill set, complementing the technical expertise.
That's a really good point. I like that. So not only, okay, do you have to have your tech savvy up, but how does this thing, in simple terms, make money? How do you
Exactly. That's it.
how does it do that? Like, how do you expand it? Are we getting the most value out of it? Are we, and what's the roadmap to the vision, right? So we're hitting this segment. How do we expand and just having that thought process, it seems.
Absolutely, that's it. Because otherwise, I think you're limited as to how high up in a business, like in the fintech space, that you can really get. And I think we're seeing already, and we're going to see way more regularly in the future, CTOs, CIOs becoming CEOs, which is really exciting because 10 years ago that was never going to be the case. A CTO, a CIO was never going to be deemed to have the commerciality required to be a CEO. Technology was seen as a cost center. Now technology is actually how you can drive your revenue. And because of that, and with the right types of CTOs and CIOs out there who have that commerciality, who are growth minded, know how to build, that CEO position is a realistic target for them.
What? Because usually, and sometimes people talk about educational requirements and getting to those positions. Is an MBA required? Like, what are you seeing?
It depends on the financial backer. Some are super keen on academic background. Others will place more value on what you've achieved in your career.
Got it. Look, Alex, this is a very enlightening conversation. Um, I learned a lot throughout it. Like this is we've had we've had other people in your business on the show, not necessarily diving into executive searching. So this was enlightening, and I really appreciate your time today. What with our conversation and the questions that I asked, is there anything that I missed that you want to make sure that people understand?
No, I think we've covered a lot of ground. That's been, I love talking about this stuff. The fintech world is something I'm super passionate about, and helping companies to grow through talent, being that growth partner is a really exciting place to be. And helping on the candidate side, helping people to secure that dream job, to move up in their career. That's super fulfilling. And I think one thing that and a couple of the firms that we work with on the PE/VC side talk about is being willing to bet on yourself. It's pretty tough to take that that step back in cash comp to take a slice of equity in something that at that point in time might not be worth very much at all. But they talk about really having the confidence and backing yourself to make that bet on yourself and the executive team that you're joining. And I always like that kind of strap line that I see in all of their job specs, regardless of the portco. It's that bet on yourself.
And when we say like taking a hit on the comp, how much? So percentage wise. So let's say there was somewhere. I want to try. I don't know how many numbers you can provide, but I'm just interested. Like, how big of a comp hit are we talking about? Like, how does that process work? I know we're about to end, but you just want something about.
Yeah, and again, it varies on where you're coming from. But if you're coming from, a tier one financial business, whether it's banking, insurance, or wealth management, and you're going into, a private equity or venture capital based startup, you're probably taking a hit from a cash perspective as much as 50%. Possibly more in some cases. The cash comp tends to be the smaller component when you go into a fintech, whether it's a startup or a scale up.
Oh, wow. And what type of percentage are you getting of the business or stock options? How does that usually play out?
That really varies according to where the business is. If you're going into a private equity business that's 4 or 5 years into their cycle, it's probably going to be very minimal. If you're going into a business that's a de novo build and it's being built from the ground up, the CEO seat can probably expect anything from 8 to 15%.
We say this a lot, right? Like when we have people on, and they covered a certain topic that we haven't covered before, we call you a friend of the show, and we reserve the right to bring you back on when something in the news hits, and we want to get an expert opinion on it, right? Just besides reading the articles, like Alex, this happened, and I want to get your thoughts. Or, I can see a next show that we're doing on compensation, how to structure it, because that would be a very interesting topic that I think people don't touch on. So, definitely we'll circle back. I mean, and I know, we touched on the overall, but I think a next episode I would want to do with you when we circle back is I want to talk about comp and how does it work and just diving into it.
Yeah, no, that sounds great. So it's a key decision-making factor for anyone making a move, right? It's not all about comp, but it's a big component.
Yeah, that would be an interesting show on a C-suite level, comp and how does it work. Okay, cool. So my team's gonna be happy now because we look for show titles, and so we already came up with one on the show, and I think that's the maximum of efficiency there is, right?
Great. We just need to get a date in the calendar now, right?
Gavin, that's all we need is a date. We have the guest, and we have a show topic, and we have an interesting show topic at that. Alex, so what we do at the end of our episode, we're going to give you the stage to talk about whatever you want.
Okay.
And I know also we follow each other on LinkedIn, so I know you're looking for a chief data officer role. So I'm going to get off the stage and let people know they could find you and so forth.
Yeah, fantastic. Well, it's been a pleasure to be on the show. Really enjoyed it. If you don't know Hanover, we're a pretty good secret in the industry for some. We are a growth partner to FinTech, InsurTech, WealthTech businesses, as well as established corporates. We pride ourselves in being able to bring executive talent that makes a real fundamental difference to businesses that are growing. So if you're looking for a role, if you're looking for talent to come into a newly created role or a replacement role, please reach out to us. We work cross-functionally across financial services, FinTech, InsurTech, wealth. Thanks, Namdi.
That's great stuff. To everyone, So thank you for watching the show. Whether you watched it today live, whether you're going to watch it tomorrow, next year, we thank you for your viewership. We thank you for the messages. Also, to our subscribers of our newsletter, we love you guys. But to the people who have not subscribed yet, it's a free newsletter. It keeps your fingertips on the pulse of fintech. So we encourage you to subscribe. I'm going to put the Tech Behind FinTech /subscribe. And you'll get access to our newsletter, what's going on in fintech, our upcoming guests, and various topics. Understand, right? These things that we're covering, yeah, you can read about it, but talking to people who are actually doing it and getting inside information, oh my God, we're the spot for you. And definitely you want to tap in. So on that note, thank you, Alex. Enjoy your weekend. And I'll enjoy mine too. And to everyone else, enjoy the weekend. Thank you very much. Cheers.
Thanks.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.